Jenny, how much does the economic uncertainty, well, first of all, it's not uncertainty. We know it's going to be bad, but how much of the economic uncertainty with regard to the numbers is going to play out in markets over the next couple of weeks?
I think markets could be pretty tough over the next couple of weeks. For the past week and a half, we've had a ton of information coming out, and some of it's been good and helpful, like all the monetary and stimulus plans and the fact that we've been getting real data. But for the next 2 weeks, there's going to be a potential vacuum of real positive information. And instead, we're just going to get all these negatives on bad economic data, bad caseloads, death rates. And so I think that could really contribute to a rocky, bumpy bottoming process in the market. And it might be ugly for the next couple weeks.
All right. So every single chartered market technician, CMT, that I've spoken to, had contact with, has told me that bottoms happen in processes, that they're not just points on a chart. So what exactly does the process look like if we were to have one? And is this the beginning of what could be that process?
I think we probably started the process last Tuesday, and I think it will be fits and starts. It'll be days like Monday, where things are looking better. It'll be days like Tuesday, where things are looking worse. And we might be on this emotional roller coaster. I liken this process to when someone's dating, right? And you don't hear from your new boyfriend or girlfriend for a couple of days and you assume the worst. You just assume it's all going to be terrible. I think that's what we could be in for, is those panic attacks where we assume the worst until we get information again. So that could be a couple weeks. And I think, to your earlier guest's point, until we see really meaningful declines in cases and plateauing of the rates of acceleration, I think until we see that and start to feel better, I think the market's going to be bumpy.
So Jenny, let's say it is bumpy for weeks, maybe even months, like some are predicting right now. If this bottoming process has started to play out, what exactly have you been doing in terms of your portfolio, your transactions? Have you been wading in? If so, where? And what kind of strategy to get in have you been employing?
Right. So the strategy to get in has been an interesting conversation that we've been having. And we've been trying to think about, do we use unemotional hurdles? Like when we see New York plateau, at that point, do we go in more? And I think where we stand right now as bottom-up fundamental investors is that we know that there are just stocks in the portfolio that whether the market goes down more, whether it is bumpy, some stocks are just at rock bottom prices. While the market might be down just about 20%, some of these companies are down 50 and 60%, and they're at the right prices now. So even yesterday, we started sticking our feet in the water. We're not initiating new positions right now, but we're increasing positions in companies that we're already invested in. So we're starting to pair off some of the ones that have had real damage and will sustain meaningful damage. And then we're starting to reinvest in companies that we've held for a while that we know inside out and can trust. And we know that the dividends are safe. We know that the earnings are going to be okay. We know that they're going to come out of this just fine, but the share prices are depressed.
What kind of stocks are we talking about? Let's say that there are existing positions that you have, but are there ones that are on your radar that you would consider as new positions if things got a little bit more attractive from a valuation perspective?
Sure. So Goldman put out an excellent report on Monday, and it has kind of a shopping list of companies with really, really safe dividends. There are companies on that like Cisco Systems, UPS, 3M, Home Depot, Bristol Myers, Merck, IBM. Some of those we already own. We already own Home Depot and IBM, but the other ones are really attractive. We've been researching them for a few weeks. We're not buying them yet, but they're on the watch list. And so if there is further deterioration in the market and we can get them at better prices, they might become really compelling. In terms of what we're adding to in our portfolio right now, yesterday we added to companies like Magellan Midstream, which we know inside out. We added to Hannon Armstrong. These are companies that we believe will have no problem sustaining dividends throughout this and are just fine and have share prices that are down disproportionately relative to the market.